welcome back to the show. Today, we are helping a business owner named Shane figure out if he has a problem with his accountant. And what we're going to be doing is we're going to be going through the 5 common reasons why you might need to fire your accountant. Now, as we go through those, we're going to talk through Shane's situation. And at the end, we're going to give Shane some advice on whether we think he should fire his accountant or whether the relationship can be salvaged. And stay tuned for the tax tea of the week, because we're going to be talking about a pharmacist and their accountant who has been indicted for charges of $150 million in scams. So you want to stay tuned for that. So welcome back, and also want to welcome back on our co-host, if we can get that working right. Welcome back, Lola. How are you?
I'm great. How are you doing?
I am great. I'm excited about this new format because I think for the people who are watching the show or listening to the show now, they may have noticed that we have changed the format some. And
Yeah.
I'm excited about this new format because people have been sending in questions. I mean, I think ever since we launched the Small Business CFO program, it feels like more people are sending in questions and they're trying to get answers. So I'm excited about this format. How about you?
I'm excited too. I like the questions because I think it puts the real life touch to the process and to what we're talking about, because you could always talk about stuff in theory. I think a lot of accounting is theory, right? In some cases, right? A lot of it is theoretical, 1 + 1, 2 + 2, whatever. But I think just being able to put like the actual scenario behind it and take the information and apply it to what's going on in a business owner's life. Because at the end of the day, I think sometimes when you talk about these topics, it's easy for you to kind of detach yourself from the emotional impact of it, because reality is a lot of people are running businesses based on this information we're providing. Like, for example, the Small Business CFO, like we work with business owners every week, every day, who are really struggling to get that clarity that their business needs, and they come to us for that clarity. And so I think that just kind of reminds us that there's humans behind it. So I think it's a great approach because I think it's a practical way to really share the information that is valuable to the business owner and do it in a way that is digestible, keep things interesting, and have something that people can learn. So I'm looking forward to further discussions on this, and I'm looking forward to today's episode discussion.
Absolutely. Absolutely. I think it'll be a great one. And I do think as we go through this, this kind of scenario or Shane's specific situation that he emailed us in, and he was gracious enough to give us enough backstory on it. But as we go through that, I think what a lot of people will hear is like, man, I've experienced that part too, or like, hey, that's pretty relevant to me. And that's why I think the action items that we give people at the end of the conversation are a game changer, because I always tell everyone, whatever situation or scenario we're talking through, if you are experiencing these problems, the action items that we're going to give or the advice that we're going to give can really help you. So let's jump into Shane's backstory. So to give you a little bit of backstory, Shane has been working with a professional that does his bookkeeping and his tax, preparation. And this person is doing both. Shane thought that was a good idea to have this person do both to cover his business, because he figured, hey, if the same person is doing the bookkeeping and the tax preparation, that means they have all the information that they need. They are in a better position to provide me with the best tax strategies, because they have both my personal taxes and they also have the business, because they can see the numbers. Now, all of that felt good.
Shane was wrong.
Throughout the year,
Shane
all
was
of that felt
wrong.
Well, what I will say is, what I will say is, all of that felt good until like mid-January. Shane got a text message from his, and most people would say he got a text message from his accountant. But if you've seen any of our previous episodes, you understand that an accountant is not just a person who does tax returns and not just a person who does bookkeeping.
Go
There
back
are
to the
like
last
5
episode.
different types of things
Yep.
that an accountant can do. So I'm
Mhm.
gonna say, Shane's bookkeeper slash tax preparer sent him a text message, and the message said, "Hey Shane, hope all is well. Wanted to let you know you have a tax bill of $32,000 that is due by next week. I suggest that you do an electronic payment on the IRS's website." Now, of course, Shane was shocked. Shane was confused. Shane was
Right.
frustrated. Shane was like, okay, one is like, why am I just hearing about this if it's due next week? And why did I only get this in a text message? And so Shane was asking, like, hey, what should I do? Is this normal? Like, what's going on here? So we are going to break this down. And as I said, we're going to go through the 5 reasons why you might need to fire your accountant. And we're going to compare Shane's situation to each of those 5 points and then give Shane some feedback on how he can address this and what should happen. But I guess before we jump into the first one, just based on what I shared in the backstory, Lola, what are your thoughts on that?
I mean, I think the relationship needs to end effective immediately. Listen, like I'm not gonna try to be like, I mean, for the purposes of this episode and helping other business owners, we definitely are gonna share this information. But I think for me, just based on what you've told me, this relationship needs to end. I think a couple of things, like you're the tax person and you're also the bookkeeper. So what I don't even know how to start to break this down. And a part of me was like when we saw the when we heard the story and we saw the note, I was like, oh my gosh, I have so many questions. Like you're getting a text from your accountant bookkeeper. My guess is you probably haven't talked to this person most of the year, and they are sending you a reminder about a tax bill that you knew nothing of. $32,000. We all know, we've done multiple episodes related and talked about cash flow. I mean, like $32,000 is going to take a pretty big dent on your business, in terms of just cash flow out the door. And and then you're telling me to make the payment online. There's no call, there's no apology, nothing. Like for me, I would fire immediately. What is that? What's that Apprentice? Is that the Apprentice show? Whether you're hired or you're fired, I don't even know what show that is. But for me, I'm like, you're fired. But we'll walk through it for the purposes of the episode. But from my perspective,
Gotcha.
my initial reaction is this dude has got to go.
Okay. Awesome. Well, I'm glad we got your thought on the table. Like I said, we are
Listen,
going to go through the framework,
yes,
and
let's
at
do
the
it.
end we're going to see, hey, after we go through the 5-step framework, do you still have the same conclusion? Do you still think this person
Listen,
should be fired?
I want to say
The
one thing before
suspension
we.
builds.
I want to say one thing. I don't think anything is going to change my mind, but I want to say one thing, which is the fact that I think this is also going to be helpful for people who need to identify the red flags, because these points we're going to discuss, because then it's like, okay, well, I haven't gotten a text from my accountant telling me I owe $32,000 a week before it's due, but could there be other things that indicate there is a problem and it's time to fire your accountant? Or as Terrell and I always say, give you opportunities and guidance to reconcile the relationship if it's salvageable. We're like the what is it? The counselors of the accountant relationship, the relationship between accountants and business owners, to where, hey, well, if you want to recover the relationship, we will give you the tools that you need to do to make sure it doesn't happen again and the problems don't happen. But if you want to dump them, we'll also give you the tools you need to make sure that you're ready to move on. So yeah, we're like the what is it? The what do they call those people who do the counseling for people who don't want to get divorced, but it's like a step before divorce.
um,
It's not
I mean,
arbitration. Like
no, I mean,
people.
I think you would just call it. I think you would just call it. I mean, it's just marriage counseling.
No, not the marriage counseling. It's the one where you go to, like, you're in court, but like
You talking
we're
about
not.
mediation?
Yes, we're mediators.
Okay. Well, I don't know if I would co-sign on that mediator,
I
because my
mean,
understanding of mediators are that they're there to, like, in most cases the decision has already been made to end this. They're just
oh
trying to
no.
end it
Okay, then maybe
outside
I'm
of
not.
court.
Maybe I'm not talking about. Maybe then it's not a mediator. That's not the right word.
Mm.
It's the one where you go to court and you have that conversation where they're kind of helping you work through. You see, this is why like I took business law in college and I don't even remember like the basics of what I covered. But okay, let's not digress. Let's jump into the points. The point I'm trying to make is Terrell and I are here to give you the counsel, and you can decide what you want to do, either to end the relationship or to continue the relationship with established expectations, which we talked about on the last episode. So if you're wondering what this expectation should be, go back and check out the last episode that we did. All right, Terrell, go
All
ahead.
right, so let's jump into it. The first point is going to be, is do they know what they are doing? So
Ooh.
this is the first question that you should ask yourself. If you're wondering about your accountant, or you're just trying to assess, like, hey, is this a relationship that should continue? The first question you want to ask is, does this person know what they are doing? So let me give you Shane's background on this question. So
Mhm.
Shane has been working with this accountant or this bookkeeper slash tax preparer for work with them in the past, and felt like this person has done a good job of reducing their tax liability. There hasn't been really any tax surprises in the past. Now, Shane also told us that, now, if I'm being honest, I can't really say that the person has really done a good job of, of helping me understand what's happening on the bookkeeping side.
Mm.
So Shane could only speak to the fact that, hey, my tax liability has been low in the past. So I feel like the person knows what they're doing there. But when it comes down to bookkeeping, I'm not completely sure what's happening on that side. I'm assuming that is happening right. So hearing that context, knowing the question is, do they know what they are doing? What would be your perspective to Shane on that?
I mean, I think I would tell Shane, hey, to really assess if they know what they're doing, you need to look at these as two mutually exclusive roles. I know that this person was really good at at doing your taxes and really good at getting you, you haven't had to pay taxes or whatever. But bookkeeping and tax preparation are two completely different things. And again, referring back to the last episode we did, if you're looking for that detail, but essentially, like a bookkeeper's responsibility is to make sure that you have accurate set of financials, right? Your transactions are reconciled, and basically your financials have a correct reflection of what your business is doing. Your revenue, your expenses, your overall profit and loss statement is basically the job of the bookkeeper to prepare that information based on what you provide and to make sure that they're including the right stuff. Whereas a tax preparer is going to take that information and then consolidate it into whatever they're preparing, depending on your status, if you're filing as an LLC or whatever, to put that information together. So my advice and my thought process, Terrell, during this situation is you kind of need to understand what exactly does a bookkeeper need to be doing. You can't use how he or she performed as a tax preparer to determine whether or not they're going to be a good bookkeeper, because those two honestly don't really have anything to do with the other.
I would agree. I do think that you should look at those separately, and like in this case, because I think on one hand, you may have Shane maybe saying like, hey, this person is, and to the best of Shane's knowledge, is knocking it out the park on the tax side.
Yeah.
But Shane has, no concept or no visibility to, hey, what's happening on the bookkeeping side. So I do think you do want to look at these separately. I totally agree with that, because I've seen a lot of tax preparers also claim to do bookkeeping. And
Hmm.
then what they're really doing is they're waiting until the end of the year to try to pull all the numbers together just so they can put it in the tax return. And then what has happened, because our business, we don't do tax returns, we just do bookkeeping, is some of those businesses have come to us And when I look at it, I'm like, yeah, this is wrong, this is wrong, this is wrong, which
Yeah.
means their tax return was wrong because the bookkeeping wasn't done properly.
I actually want to get your thoughts on something because this is something that I have to recognize that as accountants and business owners and as people who have prepared tax returns in the past, for someone who's not an entrepreneur, I'm sorry, for someone who's not an accountant, doesn't have really any accounting background, they are like, for example, like Shane, right? Like, I don't know Shane's background, but let's say Shane, like he said, he knew and he kind of just, he assumed that this guy said, or female or male, whatever, this person knew what they were doing based on this, right? How do you, as a business owner, like who doesn't have really accounting expertise or background, are there specific ways you would say, okay, this is a good way to really be able to assess if my accountant and or my bookkeeper knows what the heck they're talking about or doing? Because for us, it's easy, right? Because we know, and that's what we do on a day-to-day basis. But what about someone like Shane? Is there a way he could have kind of caught these or could have picked up on the fact that something was wrong there?
Yeah, I mean, my honest opinion is that there are some, probably high level things you can look at. For
Hmm.
example, when it comes down to the tax return, one of the things that, if you're doing a business tax return, one of the things you're going to see on there is a balance sheet there. And I always ask is, okay, does the cash number on the balance sheet agree to what is in your bank account? And then does that agree to what is on your balance sheet in your financial statements? And surprisingly, there are a lot of companies, when I look at their tax return, I'm like, yeah, the bank balance that your accountant told the IRS you have and what is actually in your bank account are two different numbers, which
Mm,
tells me there's an issue there. I think on the other hand, also the revenue number of how much people actually paid you throughout the year. When you compare that to, let's say, if you're using like some type of point of sale system, or let's say you have some type of billing system that you're using, if you just compare those numbers at a high level of here's what my tax preparer is saying that I had for revenue, here's what my system is saying I have for revenue. If those numbers aren't the same, what you immediately know is, okay, all right, something isn't adding up here. And
yeah.
I think that is, even if you don't have an accounting background, like those are some easy things. And I think another common thing that I've seen is on the balance sheet side where I've seen, I have seen, a tax preparer prepare the financial statements. They know that their client has a business credit card and the business credit card has a balance on it. But
This is
then
bad.
when you look at the tax return, I'm like, where is the liability for the credit card? Like, why doesn't it show up anywhere in here or whatever? And to me, it's like those are some simple things that you can see,
Yeah.
and things that become very obvious, even if you're not an accountant. I mean, because the numbers should just match. So, like your revenue number, your bank account number, and then let's say your outstanding credit card balance, like those are very easy numbers that should match.
That's a good, I think that's really good. Like I think those three things you mentioned are really good ways, quick ways to check. No, that's good. I think I'm gonna pull those through. That as a clip. That was really good. Um, yeah, no, but that's kind of my concern, honestly, Terrell, when it comes to these situations, because I'm like, a lot of people just don't know, you know? But I mean, that's why we're here to give you the tools
Yes.
that you need to make those kind of decisions or to assess, is there a problem?
And I think the last thing that I usually recommend for people is to just, think about when you've had a conversation with your tax preparer, bookkeeper, whatever type of accountant you're using, when you have a conversation with them, can they explain things in a way that you understand it? Because I'm
Yeah,
like, I believe that if you can't explain something in a way that other people can understand it, then that might be a sign that you don't understand it yourself. So
exactly.
if an accountant cannot break it down for you and explain it in a way, of course, maybe not necessarily the deeply technical things, but at least to give you a framework of you can walk away saying like, hey, I may not understand all the details, but I'm not completely lost.
Yeah.
If you can't walk away from conversations with your accountant like, feeling like that, then I would probably say your accountant may not actually understand it well enough to be the best fit for you.
That's good. I think that's a really good point. One thing I do want to mention on the tax side of things that I always think is a good indicator as to whether your tax accountant knows what they're doing or not is if somebody promises you a refund or promises you, hey, I can get you back money, thousands of dollars in money, and they haven't even looked at your tax return, they don't know what's going on with your business. For me, that's a red flag. Making promises before you've even had a problem to or an opportunity to review the numbers for me is a problem. And I think that on the tax side, like you mentioned, I think there's certain things on the bookkeeping side or just like overall accounting, but on the tax accountant side, I would add that as a bonus is if somebody's promising they can get you a certain amount of money without even really looking at your tax return or looking at your financials, I'll say that. Um,
Yep.
that's a problem.
And we'll definitely revisit that because I think there's another point where that one will come up. But
Mhm.
we'll go on to number two and say, okay, all right. So the point for number two is, are they the right fit for where your business is now? Now, to give you a little context on Shane, Shane started using this person like 3 years ago. And back then, Shane was making a little less than $200,000 a year. Now, Shane is making about $800,000 a year.
Good for
So
Shane.
things have changed for Shane.
Yeah.
So when you hear that backstory or you hear that context, what are your initial thoughts on this situation?
I think that $35,000 check makes a lot more sense, or that $35,000 is due makes a lot more sense. I mean, congratulations to Shane. Like I know your business has grown tremendously, which is always exciting. But I think just really being able to like this was something that we talked about right on the last episode we did when we talked about the different types of accountants. I think as your business grows, you need to recognize where your pain points are and what you need. And then you need to be able to identify who do you need to bring on to support and aid you in those financial pain points. So like for example, for Shane, he probably needed at $800,000 a year. He probably needed a dedicated bookkeeper or accountant that could kind of stay on top of some of the complexity of his business. Because did he mention what type of industry he was or what type of business he had? I don't think he did.
No, he did not mention that in the notes.
Yeah, but I think just the complexity on, the business changing. So, I mean, for me, I don't think a lot of business owners recognize and realize that, but I think it's really as your business think about it like this, as your business grows and as you're expanding, like, let's just say your product offering, a lot of the things that you used to do yourself in the let's say whatever business you had like you start to bring on and hire people to help you support that because you're really trying to position yourself to continue to grow. The same thing has to happen with your accountant, right? In my view is you need to have someone who is going to support you with as your business gets more complex, like you need that dedicated support to say okay, these are what my pain points are. Have that conversation with your existing accountant. Can they fulfill that? Yes or no? And I think, Terrell, this is something we've seen where like there's that feedback where they'll say, business owner will come and say, "Hey, this is what I need." The accountant will be like, "Yeah, yeah, 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 I can do that," right? And I think this is the situation that Shane was in, where it was like, "All right, I'm just looking for bookkeeping services. Yeah, 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 I can do that in addition to your tax accounting stuff." And the reality is like you need to be revisiting that conversation constantly of like, hey, this is what my business needs. Are you able to provide this? If the answer is yes or no, then I can kind of adjust accordingly from there. And then, like Terrell, I think the points you mentioned about whether or not they know what they're doing, I think you can really apply those questions to assess if they're the best fit kind of for where your business is.
Yeah, I mean,
But
I think that there's a lot of great things in what you said. I mean, the point that I guess you say the one quick point I will make on this one is I encourage even our own clients, like clients that we're providing bookkeeping and CFO services for, is giving them honest feedback on like, hey, if your business exceeds X amount of dollars, like for some of our clients is once your business goes over, let's say $7 million in revenue. Like, we need to start developing a plan of you bringing this accounting that we're doing or the bookkeeping that we're doing, bringing some of that in house. We might still be a good fit to do some CFO like projects, but when it comes down to the day-to-day bookkeeping, like, you're large enough to where you can afford to do this in house.
Yeah.
And also, depending on how frequently you are needing like answers or how frequent the transactions are happening, this may make sense for you to bring this in house. And I always say is that if you're a growing business and if the bookkeeper or the tax preparer that you're working with is a person who's not willing to be honest with you at that level, they may not necessarily have your best interest at heart. And they may not be asking themselves that question of, hey, based on where, Shane's business is, like, hey, when he was 200,000, I can support him and it was great. But now that he's 800,000, like, this bookkeeper slash tax preparer should have been honest enough with themselves to ask, like, hey, am I still the right fit to help him? And it doesn't seem like that question was really asked. And I think that maybe part of Shane's issue is that Shane grew faster than the person he was working with was able to handle it. And that person just wasn't able to adjust to that reality.
So, from your view, is that a conversation that should be initiated or a discussion that should be initiated on, like, Shane should have initiated that conversation? Or do you think the business owner, the tax accountant should have initiated that conversation? Like, how would you recommend, like, if someone's listening to this and, like, I'm kind of at the point where, like, my business is growing and I see myself growing significantly, like, do I initiate that conversation with the business, with the tax accountant? Or am I expecting them to be aware? Or maybe that's not even the tax accountant, just say the bookkeeper. Or is there an expectation that the bookkeeper should be, or accounting support should be aware enough of what's going on in your business to be able to give you that feedback?
Yeah, so if we're talking to the business owner, I'm definitely going to say, hey, business owner, take the initiative to bring this conversation up. Because and this is true in just any area of your life, is if you know that something should be done, then to me, it doesn't make sense to just be like, okay, well, it's their responsibility to bring it up. And I'm like, well, it needs to be done. They're not bringing it up. Are you just going to keep waiting for them to do it, knowing? I'm like, if you know that the conversation needs to happen, then I would say you bring it up. I mean, because it is your business. And I think one of the ways that you can bring it up is just to say, hey, I know we started working together when our business was much smaller. We are definitely growing. Some things are happening, processes are changing. I just want to get an honest answer from you. Hey, do you still feel like we're the right type of client that you can support? And based on the way they answer that question, you'll find out a lot about them. Like, a really good accountant or bookkeeper or tax preparer will be honest enough with you and say something like, yes, we do feel like we can still support you. If you grow past X, then that may be about where our limits are. Or if you start to move into XYZ types of transactions, that may be beyond our scope. If a person is willing to be honest with you about that, then I would say you probably are working with someone that's good. Now, if the person just answers a quick answer, yes, we can still do it, but doesn't provide any context, I would say is we might want to start watching because not all accountants are good at everything. Like, we all have our limits. And even as I think about, like, for our firm, like, there are firms that are like, we support law firms, and there are law firms that I have had conversations with, and there are other accounting firms that are much bigger than ours, and they also support law firms. And so I was talking to a firm that was about $10 million in revenue. That's probably beyond the level that we normally support. And I was like, what? With that level of things that you're dealing with in your operations, like, we would love for you to be one of our clients. But I'll be honest with you, we're not the best fit to support you based on where your business is. So there are some other firms that I can recommend that you connect with because I think they will be a better fit for you based on where your business is. And I think if you're not working with someone who can be that honest with you, I would probably say move forward with caution.
Yeah, Terrell, I really like the perspective that you shared. I think I have a as much as that I think is the I do agree that the business owner should bring it up, right? It's your business. This is your future you're talking about. This is your business, this is your baby, whatever. Um, but I do think one of the things I want to acknowledge and say is I don't think people are as forthcoming or as honest as we have been in our business. And I'll give context to that. And by that, I just mean like you making that statement and having a $10 million a year revenue potential client come to your doorstep and say, hey, I'm interested in accounting services. And for you to turn around and be like, you know what? I've evaluated this. I don't necessarily think that our firm is the best for your business. To be fair, like, and to be honest, I don't think a lot of accountants do that. I don't know. But I mean,
They
you
don't.
are and so for me, like, I think like going if I'm talking to Shane, I'm like, hey, it's even more important for you to initiate this conversation. And I think to the point that you brought up on, hey, these are some of the things that we want to do. Like, do you think your business can support us? Or we're growing. Do you think your business can support us? I think if I'm talking to the business owner, I would say be very clear about, hey, this is what's happening in the business. This is what we're going to need support in. And to be fair, sometimes like business owners won't know. It's just like, hey, I need to grow, I need to raise capital next year. They might not know what that entails to get ready to raise capital next year. So as an accountant, you should be able to say, okay, my firm has never done capital funding stuff. So you know what? Maybe I'm not the best person for you to support you in this area. But I will say that is a unique thing. And I would tell a business owner not to expect that every accountant is going to be looking out for their best interest. I honestly think that that is just something that is very unique about you and speaks to your character, but I don't think all accountants are like that. I'm just gonna say that. So
Well, I appreciate that, and I do think this is one last helpful tip. I think on that is knowing like is this person the right accountant, bookkeeper, tax preparer, CFO for your business? One of the questions that I always coach or advise business owners to ask is if you think about where your business is,
mhm.
one of the obvious questions you can ask is, hey, so what has been your experience when, you've helped a business that was growing from 200,000 to 800,000? Because if you ask that question, then they can't just BS you. They got to
That's true.
actually answer, and you'll be able to tell whether they actually have helped someone who has grown that much,
Yeah,
or you'll be able to tell, like, okay, are they in over their head?
that's
Because
good.
when you ask that type of question, like, it kind of cuts out some of the wiggle room that they can kind of BS you on. Is you're going to kind of find out, depending on how they answer that question, whether or not they actually are qualified to support your business.
Agreed. No, that's really good. All right, you want to move on to the next point?
Yeah, so the third point is, are they missing deadlines? I think this one is pretty obvious, but here's the context for Shane is Shane knew that like so last year their tax return got completed in June. And we know that the deadline is April 15th. Now, it got completed in June, but we do know that the tax preparer filed for a tax extension on April the 12th. And so we don't know on the side of bookkeeping because Shane just really didn't have a good, frame of reference on whether or not the book, he was getting financial statements on like a monthly basis or quarterly basis. He didn't really recall a regular cadence for that. So when you hear that, what's your initial thought on the topic of are they missing deadlines?
Um, I think I mean, I was just gonna say, I think my opinion so far, we're into the third point, and my opinion about Shane's accountant still stands. But specifically on this missing deadlines, I think that it's important to have that constant connection to your accountant of, like, in this case, I've heard of situations where tax accountants have filed for extensions without even letting the business owner know that they were filing for extensions, because what business owners oftentimes don't know is when you file for an extension and you owe the IRS money, there are going to be late fees and or penalties related to that extension if you owe money on whatever it is that you owe. And so I don't think it's a decision that should be made lightly. Like, okay, fine, if for whatever reason there were delays and there was certain stuff going on, so we had to extend the tax when we filed. But for me, I think missing deadlines starts to deteriorate the trust, especially if you've committed to a deadline, right? I think on a personal side, like, that is something for me, even as a business owner, we've worked with people that have provided services to us. And when we've agreed on a certain deadline with them and they don't deliver on the deadline and there's just no communication and the business owner is having to initiate the follow up, then I think it just makes it very awkward and it really starts to chip at the trust um, that you have for that person. So what are your thoughts on that situation?
Yeah, I mean, I think that that is a really good point about, if they are filing for extensions and not communicating that to you, the question you think you got to ask yourself is, did they file for the extension because I was late as the client, or did they file for extension because they were late as the accountant?
That part.
And I think that as you get that kind of clarity, I mean, it really helps you answer that question. And I do think on the bookkeeping side, because this is a common thing that I see, in all transparency, I've had to face this myself in our own business with our clients.
Yep.
Is I went back and I realized for some of these clients, when we onboarded them, we didn't do the best job of setting the expectation of when they would be getting their reports, or
Yeah.
what type of information they would be getting and how frequently, and when the deadline was. So I then had to go back to, some of our clients that we have been doing work for them. And if they emailed us or they called us, we would provide an update. But I had to go back and say, hey, you know what? We shouldn't be waiting until they give us a call. Like, it should be built into our processes that
Right.
they should know you are going to get reports by XYZ date. And there should be someone on our team that is emailing them by that date to say, hey, here are your updated financials, or hey, we are almost done. Here are 3 items, or here are 5 items we need you to provide a little bit more context on. That way, the client knows on a very consistent basis, I am receiving something from the TL Turner Group, because they understand there is a deadline for deliverable. And
Hmm.
so I do think with a lot of where a lot of clients, what they should do is they should ask their bookkeeper, their tax preparer, what are the deadlines that I should expect to receive something from you? Whether it's an update, whether it's communication, or whether it's some type of report. And then you can just mark those dates on your calendar so hey, I should be getting something. And if you don't get something by that point, they missed the deadline.
Yeah, and one point I want to add, because you did make a good point that, hey, we have been in a similar position. I think that situations where I've seen this work better, where, I mean, because the reality is, like, things fall through the cracks. Like, don't expect your accountant to be like a superhero, perfect, like nothing gets missed. There are going to be situations where some things do happen, right? But I think what really makes a difference here, and like what I'm trying to communicate here, is, do they come back and acknowledge the missed deadline? Right? Is It's almost like, you've seen situations where you have people who, hey, they miss a deadline, and then when they miss the deadline, there's no acknowledgement of, hey, I missed the deadline, but we'll take actions to rectify it. So I think that's an important point to make in that. But yeah, what else do we have on the points?
So point number 4 is, are they clear and reliable with communication? I think this kind of, we started alluding to this some, I think, in the last point about the deadlines, but I do think in this case, specifically for Shane, so Shane has noticed that, in working with this professional, he hasn't been very responsive. So his tax preparer hasn't been very responsive when Shane has had a question or Shane reached out about something. And Shane is like, hey, sometimes I'll give him a call. He doesn't pick up my call, or I don't get a call back, or he may text me and say, I'm in a meeting, and he never calls me back. And then to top it all off, this $32,000 bill he's asking me to pay, he sent me a text message. So, what are your thoughts on that?
I think that shouldn't have come in a text message. I think that should have been a phone call. And I think the tone should have been very different, because at least the way that I understood the text message based on what Shane said is it almost came across as a reminder, which I'm like, why are you sending me a reminder for something you never told me about? So I think that's completely the wrong approach. And there needs to be some introspection on the part of this accountant's life.
You're saying
That is all.
this accountant needs to have some introspection on their entire life
Yes,
about
they need to go sit down and think about why it's okay for you to tell somebody via text that they owe $32,000. Like, Shane is making only $800,000 a year. Shane has employees to pay. Shane maybe just can't just transfer $32,000 to the IRS without situation. And then, did you even offer to say, hey, I can walk you through, maybe, hey, let's look and see if there's some alternatives to delay the payment. Hey, maybe we can work with the IRS to do payment plans. Like, no sort of, at least from my understanding, no sort of emotional remorse about this situation. It's almost like, hey, I'm sending a bunch of clients, hey, they owe a reminder. Oh, let me send Shane a reminder too. But maybe you forgot that you never told him he owed 32 grand. Like, why is this okay? So, anyways, those are my thoughts on that.
Yeah. I mean, I agree with you. I do think, no one really likes a bad financial surprise. And
No one
I
likes
think that's
bad
just,
surprises, period.
yeah. I mean, but I do think people have a exceptional distaste
Oh, yeah,
for bad financial surprises. I
that's
mean,
true.
even we've gone out to restaurants where I've observed people to where they get their bill and there's a 10% gratuity added, and they
Oh,
are
yeah.
flipping out.
What? Like, I didn't know this. You should have told me this before you sat me down. Oh, yeah, there's an automatic. Oh my gosh. Yes. Okay, fine. I agree. That you're right. There
To
is a
where it's
difference
just
when it
like,
comes to money.
even when the dollar amount is low, people just don't like bad financial surprises. Now, if it's a pleasant surprise, people are more than happy to receive those. But I do think that, accountants, especially for all the accountants that are listening,
Mhm.
is really embracing that reality, is that for some accountants, it's just numbers on a page. But for the other person that's hearing this, that they need to find X number of dollars that they were not expecting or they weren't prepared, like, for them, it's not just numbers on a page. It's an emotional experience for
Right.
people when you are telling them that they have to take money that they believe is theirs and then go give it to someone else. I mean, it's like,
Yep.
that is not something that, I agree with you. It's not something that should come through a text message. So I definitely think in this case, Shane's tax preparer slash bookkeeper
He's tripping.
definitely gets an F on point number 4, as far as
Very,
like
very bad.
reliable and clear communication on this one.
Very
So
bad.
the 5th point is, do you trust this person? Now, this one is always an interesting one, and I do think this one is very, very important. So here's the context for Shane. So Shane has never felt like this person was doing something shady or this person was doing something underhanded.
Mhm.
But Shane does recognize that it's never been explained to him how the accountant is able to lower his tax liability in the previous years. And then also, Shane has never, I mean, the bookkeeper has never actually explained to Shane how the numbers work. So Shane's never actually got an explanation. So he hasn't had a reason to suspect the person was shady, but also at the same time, he's never gotten an explanation as to why his tax liabilities were low. So what are your initial thoughts here in kind of that context?
My initial thoughts is my scoring for Shane's accountant on this. Do you trust your accountant? I think it may have been about maybe like a B plus initially because it's like I'm getting the positive results that I want. I don't really understand why. So, hey, you know, B or a B minus, it's just like, hey, they're not really explaining it to me. There's no red flags. There's nothing wrong so far. But then I think after this experience, it's definitely an F. If there was a lower grade than an F, it would be that. But I think I would say an F in this situation because I do think like it goes back to all of the points that we've made, like points 1 through 4 are really stuff that help craft trust, right? And if those things were already not established, now you're faced with the big surprise. So like if I go back to point 4, right? Like you're not communicating clearly. You're missing deadlines. Like all of those things are basically built up to now developing a lack of trust, which is going to lead to already has led to Shane not being able to trust really this relationship any longer with his accountant.
And my perspective on this is I honestly think that Shane never really did trust this person because there was
Mm,
nothing there was nothing done or shared
that's fair.
that actually built that trust. I think
That's
Shane
fair.
Shane was happy with the result because the tax liability was low, but there
Mm,
was the accountant didn't really provide an explanation. The accountant didn't provide any context for Shane to be able to say, yes, I trust that they are doing the right thing. It's just Shane was getting a good result, so he just didn't think about it.
that is
But
fair. Yeah, that's fair. Go ahead.
I think when this situation came up, then I guess you say the trust or the lack thereof really showed up to where it's just like, hey, I have so many questions because I think that if Shane really did trust this person and they text him this, Shane would have been like, that's not what I expected. I think the number is right, but I mean, of course, I would like further explanation, but they would at least been like, hey, I trust that the person is doing the right thing. So if they're telling me it's 32,000, it probably is 32,000. Now I just need a little bit of help of, getting comfortable
Digesting.
accepting that reality. But
Yeah,
I
so
think,
go ahead, sorry.
oh, go ahead.
No, finish your point.
But I was gonna say, I mean, I think for Shane I think in this case, it doesn't seem like his accountant ever really built the trust. It's just the accountant was producing a good result, so Shane was happy with the good result. But when the good result stopped, like you can clearly see, Shane does not trust this person that they've done this properly, and I don't blame him.
Yeah, that's actually a really good point. I think it's almost like there was always an absence of trust, but now it's just like I guess I feel this is exactly what it is. I feel like trust is almost like a bank account that you deposit into, right? So like you gradually develop that trust as you go. Like for example, clear communication. That adds 2 points. Hey, timely, not missing deadlines adds another 2 points. And you gradually build on that trust. And then when a withdrawal comes against that, where, there's a miss or something happens, if there's enough in that bank account to cover that, then the trust doesn't completely get depleted. But in this case, to your point, his accountant never built up a balance. So now it's like, I think from what I recall, from what I saw, like the relationship, Shane is like, listen, like I think he's basically on the verge of ending the relationship, if not already. Um, but I think like it really does. It really does. You really do make a good point on as long as I'm comfortable, as long as nothing is wrong. But the moment something is wrong, then it's like, man, like dang it, like I should have seen signs, right? So it's
But
unfortunate,
no, I
but
think that is, I mean, I think that is a really good point because one of the things that someone has said to me before is like, you really don't know if you trust the person until you're put in a situation where trust is tested. And that's when you'll find out whether or not you trust them, because it's like, of course, everybody trusts everybody when things are good, because you
Right.
don't have a reason to actually, question things. But the
Mhm.
moment something doesn't go right or something goes wrong, then you have to ask yourself how you respond will tell me whether or not you trust that person. So for just the recap, and then I'll ask you what your final conclusion is, and we'll get a drum roll to see if your opinion has changed. The first one is first one is, do they know what they are doing? The second point was, are they the right fit for where Shane's business is now? Third one is, you know are they missing deadlines? Number four is, do they have clear and reliable communication? And number five is, do you trust them? So based on those five criteria that we walked through, and knowing Shane's situation, what would you tell Shane he should do about this relationship with this person who has served as his bookkeeper and tax preparer?
I think he needs to fire him. Like, that is the conclusion. I think he needs to fire him because, to be honest, like, I think he needs to fire him as a bookkeeper, and I think he needs to fire him as a tax accountant. Do you know how awkward this relationship is going to be going forward now? You sent me a text telling me I owed the IRS $32,000 days before it's due. You're reminding me I need to pay this. You never told me that this was what was due. You waited until the last minute to do my financials, I'm assuming, based on this situation. So yeah, no, I think my conclusion is the tax accountant needs to be fired and the bookkeeping needs to be fired. So you need to just fire him, period. That's my assumption. What are your thoughts? Do you think this relationship is salvageable, Terrell?
I do not think this relationship is salvageable. I mean, I
Oh,
think this relationship should end. It should end
immediately.
immediately. Yeah, it should end immediately.
Immediately,
But
no.
I would immediately this person got this message mid-January. So I would say is, let's start looking for a different accountant. And hey, we may have to file some extensions. But let's get a different accountant, because the other piece that I left off that Shane shared to the communication is, when Shane reached out to them to get further explanation, this tax preparer said, hey, based on the workload that he currently has, he would not be able to get back to Shane for another 3 weeks.
What?
I was just I was like, wow,
I mean,
this guy
Terrell,
needs to be
if you
fired
had
immediately.
Terrell, if you had led with that at the beginning of this episode, I don't even think we would have had an episode. Like, I think it would have been fire your accountant, and these are the 5 reasons why they should be fired. It wouldn't even be an evaluation. How do you text someone that they owe $32,000, and when they ask you what happened for an explanation, forget even the bookkeeping, forget about that. This is a tax accountant. Can you explain to me why I have a $32,000 tax liability? And your response is, I have too much work and I'm going to get back to you in 3 weeks. So for now, what should I go ahead and do? Just pay the $32,000 to the IRS? Did you even propose and give me options on how to do a payment plan? I mean, honestly, I am sorry, but this guy or female, whoever this person is, because he didn't tell us the gender of the person, whoever
It's a
this
he.
tax,
It's a
it's a he.
he.
Okay, whoever this person is, he's trifling. Okay, I'm just gonna say it. And for those of you that don't know what trifling means, go and look it up. But this is not the proper behavior, and this is wrong, and you should not be doing this. Very bad. Effective immediately.
I totally agree. And which is why, like I said, I definitely think that in this case he should fire the accountant. And I think also for a lot of the people who are listening is that they may not necessarily find themselves in an extreme situation like this, but they still may be on the fence, and they're thinking about, does this relationship still make sense for me? And so one of the things that we created was, we created a quiz, and the quiz called, do I need to fire my accountant quiz? And so there are a couple of questions on that quiz. It'll take maybe 15 minutes to take the quiz. And then you can add up the scores that your accountant, like there's some questions, you go through those questions, you give your accountant or your tax preparer, your bookkeeper a rating. And at the bottom, it's going to give you a scale that if your bookkeeper, your accountant scores below X, then you should fire them. If they scored, between, this number and that number, then maybe you just need to have a conversation with them to fix some of the gaps that exist. And if they score above a certain level, it's just like, hey, you're working with a great accountant. So, hey, keep the relationship going. And so we'll make sure we put that in the show notes so people can download, that checklist, because I think that will help a lot of people as they're evaluating their relationship with their bookkeeper, their tax preparer, or even their fractional CFO. They're looking at that. So thank you for helping me, assess Shane's situation and give Shane some advice. So Shane, you should fire your accountant. Now,
Shane, I'm
before
so
we
sorry you had to go through that. Let me just say, Shane, if you're listening to this episode, listen. We appreciate you sending your question in, and we hope that you have found at this point an accountant, or maybe you're still contemplating, because I think that's what was said in the email. But Shane, you need to let this relationship go. It's over.
Yeah.
That is my advice. But yes, thanks for sending in your questions. If you have any other questions, feel free to email us at the contact at TL Turner Group for your questions, and we will discuss them and provide insight.
Absolutely. Well, before we wrap up, we did promise a tax tea of the week. So, Lola, can you share what is this week's tax tea?
Listen, are you ready for the tax tea of this week? I always like to open with that because, I mean, honestly, this one is a really good one. Okay. I'm just going to tell you. So, all right. So, on this week's tax tea, let's just kind of go through the bullet points and then we can dive in. So, this week's tax tea actually has two individuals. We can call them partners in the business. One of them is the CEO of the company, a pharmaceutical company, and the or not pharmaceutical, I guess you can call it a pharmaceutical healthcare company. The second one is the accountant that was supporting that pharmaceutical company. So together they could get up to 20 years in prison. And just so you know what happened here, it's actually a very interesting, elaborate scam. But basically what happened here is that they were doing what we call a healthcare scam. So the case didn't go into specific details about how they were funneling the money or what they were doing with the money. But basically what they were doing is the pharmaceutical company was calling people over the age of 55 and telling them that they could get them, trying to get a profile on them, like what kind of drugs they used, stuff like that, medicine, got a profile on them, and then took their information without their approval, these 55 and older individuals, and basically put in fake requests for medication into several doctors' offices, several pharmacies on behalf of these people without their approval. And then they would turn around and file these requests with the insurance companies, right? And what the insurance companies would do then is they would say, okay, you have a fulfilled prescription on behalf of this client or behalf of this patient. And so, hey, let's say the drug was $7,000, just as an example. With the insurance coverage, the drug is $5,000. The insurance pays the balance or whatever. Maybe this is not a very good example. Let me use a simpler example. So basically, if the drug costs, let's say $1,000, the insurance is going to pay the difference between the copay amount, which is the amount that the patient has to pay, and the amount that the insurance covers. So like in this case, let's say the copay was $50 and the insurance company would pay $950. In that case, the insurance would pay this $950, would pay it to the pharmaceutical company. The problem with this situation was they would basically pocket that money and keep it, and they would turn around and provide the drugs to the patient. So I'm not really sure what the actual what they're actually being charged for here, but basically that was a setup. They were filing these things on behalf of patients without their information. They were getting their information without their consent. They were getting their information from different databases, calling them, putting in fake prescriptions on their behalf, and then pocketing the money that the insurance company sent.
So, I've heard of situations like this before, and I think in the situation I've heard of it was like the pharmacist they were creating these fake prescriptions. They were filing the paperwork with the insurance company. The insurance company would pay them, and then they weren't actually giving the drugs to anyone. Like there were no drugs that they were actually delivering. They just kept the money that the insurance company gave. And so when it all came to like head and people looked at and they were investigating, what they ended up finding in like I said, in other situations similar to this, they found is that there were all these payments that insurance companies made, but none of the patients were real and there was no actual medicine being given to the patient. So they were just pretty much pocketing, as you said, that difference between, what insurance would pay, and, the copay. They just kept pocketing that difference. So I can
Yeah.
definitely see that I can see that as why they ended up getting caught.
And you know what's actually funny here? And I think maybe to your point, I think this is where the difference is because in the case, it actually said that they were giving this money, they were giving these prescriptions to the patients. So what I think they were doing is they were using this business to launder money. I think that's what they
Ah.
were doing because for me, I'm like, it doesn't make sense. Like you're basically filing it on my behalf. And then the part that didn't make sense is they were also not collecting the copays from the patients. So they would just tell them, hey, like your insurance covered the full amount. You don't have to pay any copays. Just this is the drug. They would mail them the drugs for free, but then they would keep the money. So I think what they were doing is they were then taking that clean money from the insurance and they were doing money laundering through the business. That's the only thing that
Oh
makes sense
wow.
to me here. Yeah.
Okay. Okay. I
So
can now I can see the 20 years conviction. I mean,
yeah,
this is a mess. Like,
it, it
I
is.
mean, especially if they were taking, especially if these people didn't actually, I mean, they're writing fake prescriptions, I
Yes.
think, which is a problem within itself, is they are prescribing drugs to people who their doctor has not actually requested.
Well, I mean, to be fair, I don't think they were writing fake prescriptions. They were putting prescriptions forms in
Okay.
after they talked to senior citizens to say, "Hey, what are some of the medicines you take, or what are some of the things you're experiencing?" So they had people calling, like sitting customer service calling people. I guess they got some information from a database, they bought it off of somebody. They were calling these older citizens and basically saying, hey, what are you dealing with? Hey, do you have pain in certain areas? Are you struggling with certain sicknesses? Hey, we can get you prescriptions for this. And then they were putting in like forms in to request that information. So
But
yeah,
but I think even in that, to where, like I said, depending on, like I said, the way some prescriptions work is like you need the doctor to write the
actually that's a good point.
prescription. To
That's a good
where
point. Yeah.
if they did have, it would be very strange if they had doctors on call to say, hey, I know this, John, James, and Jenny are not your patients, but they need a prescription for X. Can you write
Yeah.
it for them? If that doctor agreed to that, that doctor should go to jail too. Because,
Yeah.
I mean,
That's a good point.
what it sounds like is that they found out what prescriptions people were taking and pretty much they created the prescription, or they wrote it, or they filled this fake prescription, gave them the medicine, and then pocketed the money. And like I said, I can see why they got in trouble for that. But I mean, I think the IRS got involved because, although this is, money laundering, and they're getting this, they're breaking the law to get this money, the
Mhm.
IRS still considers like, hey, this should show up on your tax return. Even
Right.
if the money,
Yeah.
even if
And
the
the
money is illegally gained, it still
right.
needs to show up on your tax return.
Yeah, and I think the accountant that was doing the other person in the business that got charged was the accountant because he was falsifying the tax returns. So maybe he was, it doesn't say exactly what falsifying represented, but basically he was saying that, or basically the charge was falsifying tax returns. So whether it was, you know, not being forthcoming about the source of the income related to the business or whatever he was doing. But definitely a situation where we mentioned where, hey, ideally your accountant, or a lot of the idea or the thought process is your accountant should be exhibiting integrity in how he or she manages or runs, helps you manage your financials. They shouldn't be joining you to do bad things like this. So not a good example,
Absolutely.
really. Yeah.
Absolutely. What I will say is it is another example of the fact that foolishness is still happening when it comes down to money, tax,
True.
and business. So thank you guys so much for tuning in. I would say tell a friend about this episode because there are a lot of people who are debating, especially during the first part of the year when it's tax season. People are debating, do I have the right tax accountant, or am I working with the right bookkeeper? If you need a really good bookkeeper, definitely email us, contact at TL Turner Group. Well, we can make some recommendations. If we're the right fit for you, hey, we'll recommend our service. If we're not, we have a ton of friends who run bookkeeping businesses that we can probably make some recommendations for you of other people who could be great for you to work with. But again, thank you guys so much for tuning in. Till next time.
Hey, it's your girl Tia Robertson. I'm the host of Entrepreneur Insider. Right here on RETV every Thursday at 6 p.m. Eastern for entrepreneurs and news that you need to know about. See you there.
Welcome to What's Going On? My name is Demita Joe. Each Wednesday, you can find me here at 3 p.m. I'll be over here discussing different things that are going on and try to bring you a boost of positivity for your week because we all need this. We're going to share some feel-good stories. We might find a hometown hero. We may take a look at some trending topic. And sometimes we might even find a lesson in a not-so-warm and fuzzy story if we can. I'm Demita Joe, and I'll see you guys on the next episode right here on What's Going On.